What's going on, investors? So in a couple of hours, we're going to have earnings reports from HIMS, Open Door, and Tattoo Chef, which are some of my biggest positions in my portfolio. And then tomorrow, we have earnings reports from Celsius Holdings, okay? So today, I want to talk about when to sell a stock, all right? Because if you're judging off Palantir's results, okay, so Palantir came out yesterday, and as a result, I mean, the stock absolutely got battered after earnings. And even in today, I mean, we gapped down and we are trading even lower. We're down another 5% today. And this is off the back of earnings that were okay, all right? It was okay. I wouldn't say the earnings were anything spectacular. I know you've got a lot of Palantir fanboys that are hyping this up, but in reality, you've got to ask the question, in this quarter, our top line grew by 36%, right? 36% is not really that impressive. We've been growing at over 40% prior to this. So 36% is a slowdown in growth. You got to ask yourself, like, do we deserve a price to sales ratio of 37.91, right? If we're only growing at 36% top line, this is where valuation starts to play a key role. And of course, I've heard people talk about stock-based compensation. However, if you look at the stock-based compensation for this quarter, it actually decreased from Q2. Okay, our stock-based compensation for this quarter was 184 million, but in the prior quarter, it was over 200 million. So the stock-based compensation is coming down, which is a plus. But I think what Wall Street doesn't like is this revenue growth here. 36% top line. It's much slower growth than we've come accustomed to with Palantir, and as a result, the stock is getting battered down 5% today. Do we deserve a price to sales ratio of 37.91? And that's the question you have to ask yourself. So obviously, when you're seeing a lot of bloodshed like this, the question now is, should I sell? Is now the time to sell? And, depending on how Tattoo Chef, how Open Door or HIMS reports their earnings as well, again, depending on how the market reacts to it, you might also start to ask yourself the same question, like, should I sell out of these stocks as well? So I felt for this video, this selling framework might help you out. Okay, so if you get any value, please make sure you smash the like button. With that said, let's dive into it. So this is the when to sell a company framework. Okay, I shared this with my Discord, and I feel like this is so crucially important. And if you stick to this when to sell a company simplified framework, I think that will help you from acting irrationally, because the market in the short term can be very irrational, as we've seen many times, but we have to remain rational in an irrational market within the short term and remain rational for the long term. So if you look at this framework, okay, so let's say you want to sell Palantir, okay, earnings came in a little bit weaker than expected. You now ask yourself, has your conviction on the company changed? Okay, if the answer is no, so let's say you've looked at the fundamentals, you've looked at the wins that we had this recent quarter. So yes, okay, we grew 36% year over year. It's not necessarily that strong, but also we added 34 net new customers in just Q3 alone. Our commercial customer count grew 46% quarter over quarter. Our US commercial revenue grew over 103% year over year. Cash flow from operations was also 101 million, representing a 26% margin. Our adjusted free cash flow was also up. We closed 54 deals of $1 million or more, of which 33 deals are more than $5 million or more, and 18 deals are $10 million or more. So again, when you go through some of the wins that we had in the quarter and double back on your research notes and your investment thesis, most of the time you'll reach a conclusion that your conviction hasn't changed. And if that is the case, then it's pretty much straightforward. Don't sell, irrespective of us being down 5% today and us being down another 5% yesterday. And, you look at the stock and it's absolutely tanking. It's easy to kind of panic in moments like this. And, we're probably going to see the same thing with Tattoo Chef or Open Door or HIMS or Celsius Holdings. The market acts really irrational in the short term, especially if you've been paying attention to the macroeconomic news. We had inflation reports come out and they were much higher than expected. So generally, inflation reports like that have a negative effect on growth stocks. So you've got to look at Palantir now and see how it's reacting. And you've got to ask yourself, how much of this overreaction is to do with the stock itself versus the current macroeconomic dynamics of the market? And that should prevent you from making some emotional decisions, okay? So if your conviction hasn't changed, very simply, don't sell, okay? But if your conviction has changed, right? Let's say you're not happy with the growth. Okay, yeah, it's less than 40%. This is kind of dwindled on your conviction. The question now is the conviction change solely correlated to stock price movement? All right, let's be honest. Let's be honest with ourselves, all right? If Palantir was up today, you wouldn't even really consider selling. And the only reason why you are considering selling this position is because it's down over 10% since we reported earnings. So if you wanted to be honest with yourself, the only reason why you actually are considering selling, despite the fundamentals improving, financials improving, we're growing. Yes, not at the rate that we used to, but we're still growing. The question is it stock price related? And you're going to have to answer yes if you're being honest with yourself. And if you say no, that's a different story. But let's assume the reason why you've reached a decision to probably sell the company is because of the stock price movement. Then what's your next step? You've got to revisit your DD. Okay. You lack conviction. It's that simple. Why did you invest in Palantir? Why did you invest in Celsius Holdings? Why did you invest in Tattooed Chef, Open Door, HIMS? Why did you invest in them in the beginning? Okay. And if your thesis is still intact, or even better, it's improved, then you move on to the next step. Okay. So is conviction still low after that? And usually it's no, okay? If you go back and you've revisited your research notes, you've looked at the recent quarterly performance, is the conviction still low after that? Most likely your answer is no. Because if your reason for investing is still intact and the company has only been getting better and better with each single quarter, but yes, the stock price is probably going the opposite way, then the answer is no. And then you have to boil it down to emotions has kicked in and essentially don't sell, all right? Don't sell. But if your conviction is still low after you've revisited your research notes, then you need to sell. Okay, so that's when you should sell. Now, let's assume your conviction dwindling is not as a result of stock price movement. Then you've got to ask yourself, is your long-term thesis broken? Okay. Is it broken? So for example, let's say data is no longer the new oil, or the demand for data is dropping, or let's bring it to Tattooed Chef, for example, is the plant-based food industry growth slowing down? All right. Is there less demand for plant-based food? Okay. And is that affecting sales? So that's when you can ask yourself, so is your long-term thesis broken? And in that kind of scenario, the answer is yes. And under that circumstance, it's best to sell. Okay. So if you looked at the industry and the industry is not going as you predicted, which does happen. Okay. It is possible, believe it or not, it is possible to actually be wrong. And also remember, things change. So sometimes you just got to swallow your pride, admit the fact that you made an investing mistake, cut your losses and move on. Okay, so then you sell. However, if your long-term investment thesis hasn't broken, then the next advice is to give it a couple of quarters and study the company. Okay, so is your conviction still low after more research and after a couple of quarters of performances that you've paid attention to and you've liked? And if the answer is no, then don't sell. But if your answer is still yes, your conviction is low, then sell. Okay, so if you want, take a quick screenshot of this framework, put it in your office, put it on your phone, put it wherever you can refer to quickly if you do feel like selling, especially if a company has reported earnings that might not necessarily be as strong as you had expected, or maybe Wall Street are just being completely irrational. Because if you look, for example, at a company like Upstart, I've not invested in this company, right? But Upstart, again, to be fair, it had a crazy run up. But Upstart reported a triple beat last night. They beat on all fronts, okay? But they still dropped over 24% this morning. Now, it's obviously starting to make a bit of a recovery, but it had a triple beat and still dropped over 20% at market open. How is that rational? It doesn't make sense, right? It doesn't make sense, but this is what's happening. In circumstances like this or cases like this is when you need to revisit your DD. So a final word from Nick Sleep. Nick Sleep is one of my favorite investors of all time. I've been reading his letters to shareholders, which he's published. So if you are interested in Nick Sleep, you can download his shareholder letters from back in the day. This is a guy that absolutely crushed the market, and in the end, he concentrated his portfolio to just about 3 or 4 stocks, which was Costco, Amazon, and ASOS. And he pretty much closed his fund down because those are the companies that he wants to own for life, essentially. So this is one of his final words that he gave to shareholders. He said, a final word on the need for patience, okay? One of Nomad, so Nomad was the fund. One of Nomad's key advantages will be the aggregate patience of its investor base. We are genuinely investing for the long term. And he put in brackets, few are, exclamation mark. Only by looking further out than the short-term crowd can we expect to beat them. Facts. Only by looking further out than the short-term crowd can we expect to beat them. And what are the short-term crowd mainly focused on? quarter after quarter. That's it. You know, they don't think 2 years in advance. They don't think 3 years in advance. They don't think 5 years in advance. Like, where would this company be within the next 5 years? They only look at it from quarter to quarter, so pretty much 3 months at max. And if they don't perform, or if they don't grow at the rate that we were expecting, I'm out. You know, and hence PLTR. Perfect example. So we might see that today with Tattooed Chef, HIMS, Open Door, OPAD. We might see that. But if the long-term thesis hasn't changed, the only way we can beat them is by looking further out and taking advantage of the stock price weakness. And tonight I will be live streaming Tattooed Chef's earnings, but it'll be over on Jesse's channel. So Jesse's channel is a plant stock. So as you can see, we're going to be going live in about 4 hours time. So if you go on YouTube and type in plant stock and click set reminder, all right, Jesse will be live streaming it and I'll be a guest on his channel and we'll be going through the earnings call. We diving through the financials. And to be honest, I hope to see as many of you guys there. So thank you so much for watching. Remember, stay rational in an irrational market. Okay, use that investing framework. Okay, this investing framework of when to sell a company is incredible. I don't know who created this, but thank you. And I shared it with my Discord. If you want a copy, you can take a screenshot if you want, or you can join my Discord group. The Patreon link is in the description below. Check us out if you want a copy. It's on there. You can download it, and then also you could be a part of my community. But thank you so much for watching, and I'll catch you in the next one. Peace.